Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on June 7th. And as a reminder, if you are watching this on YouTube, give us a like, leave a nice comment, subscribe to the channel, help us out a lot, help with the algorithm. I do appreciate it. When we get into the market, honestly, this week has been kind of a microcosm of what I've seen the last many weeks, which is mixed. You know, it's not bad, but it's not good. There's some selling on strength, but there's some support on weakness. And I'll go through and show you a bunch of charts from, really everything except the S&P 500 and NASDAQ, very market cap weighted, but just about everything else, whether it's growth or, industrials or broad caps, small caps, mid caps, broad market. It's all kind of a neutral intermediate term trend, okay? Now, neutral is not bad, okay? A couple of days in either direction, really nice on the upside or on the downside, maybe more than two. But, a few good days could really make all the difference. Conversely, a few bad days would probably put us back in sort of the correction soup again. Okay, so overall, it's just really picking your spots, obviously trying to get out of things that are weakening, cracking, acting kind of funky, and into some of the fresher names. One of the key themes, I guess I would say, and I said in an interview this week in the Cabot Wealth Daily, was that, the fresher names, the things that have gotten going, February, March, April, or, maybe even in May on earnings or something, those have tended to hold up better. Some of the names that have been running for 9, 12 months, that's kind of where we're seeing some of the issues. It's not 100% on that, but just, in general. So overall, long term, I remain as bullish as ever. I'll be talking about that in a webinar here in a week and a half or so. But overall, I think right now, especially as growth investors, I don't want to say less is more because some things are working and look pretty good, but it's a little bit of a washing machine type action. Things are just kind of getting tossed around. The first couple of days of the week, these things look bad. The end of the week, they look pretty good. This thing looks good, it breaks. This other one gaps up. If you own 10 stocks, chances are every day, you got one or two of them are giving you a headache, but one or two look great. It's just that type of environment right now. Big picture, I think the next big move is up, but right now we're kind of waiting to see until the market kind of shows its hand a little bit. In Cabot Growth Investors Model Portfolio, we had a bunch of moves the prior couple weeks. This week we did nothing. We're 35% cash. Honestly, I actually think that's a little high, but nothing was screaming buy to me in terms of an individual name. So we just did nothing. We'll hold the cash. I can get invested real quick, but same thing I said a few weeks ago. We just need to see some of these stocks that have been consolidating, have set up some launching pads, show some upside power, show some legitimate breakouts, not just for a couple hours, not just because of some rotation in the market, but just some real upside power. We have seen some of those. I think we own some real leaders if and when the market gets going again, but we just need to see more and more sort of join the parade. Okay, let's hop into the charts. As always, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So again, when you look at the big cap indexes, so this is the NASDAQ, this is kind of classic action. And I'm not discounting the big cap indexes. I'm not trying to say, well, it's all just two stocks or anything like that, because it is what it is. Right here we had this shakeout last Friday to the 25-day moving average. We've leapt to new highs this week. Now, there weren't many stocks that actually moved to new highs, but the index moved to new highs, and it's holding up pretty well today. S&P 500, basically the same thing, not quite as strong, but you can see same sort of thing, dip here, held support, back to new highs. But just running through sort of the rest, whether you're looking at, the market or growth stocks or a bunch of different things, it's just, IWM is kind of the weakest, but we'll start with this. Just kind of intermediate term trend sideways, not awful, just kind of flopping around in a trading range, okay? Mid caps, this is kind of more what we see, the resistance at the prior highs, it's backed off, it's a little bit below the 50-day here, but it's kind of just right in the middle of the range, right? Here's RSP. It's not just broad market. Here's big cap stocks, but the average S&P 500 stock, same sort of thing. This is RSP. This is QQQE, which is the unweighted or equal weighted NASDAQ 100. Okay. It's just name after name. This is the momentum fund. Now this looks a little bit better. It did pop here a couple of days ago. We had a very good day for growth stocks. I guess that was Wednesday. It was the first good day in a couple of weeks. But still kind of battling with resistance here. So if you want to call that positive, but overall, I think that's relatively intermediate term neutral. Okay, the IPO fund, obviously this is more glamour stocks. This is a little bit weaker, but again, just kind of in this, in the middle of the recent multi-month range. And then you just dig in. This is the IBD Mutual Fund Index. I don't want to hammer this home too much, but this is, real money growth funds. What does it look like? Kind of like all the rest of the stuff we're looking at, okay? Now, like I said, a couple of good days, or I shouldn't say a couple because, I don't change my mind that quickly usually, but, if all of a sudden we come in and have a bunch of good days, volume, individual stocks, and things are kind of hitting new highs, and it's not just, two or three stocks doing that or, one sector. Yeah, I do think this could be sort of, call it a cup with handle if that's your thing, but this could be sort of a kind of a fresh second stage, so to speak, launching pad, right? The initial kickoff was back here in November or October, November, right? Had a huge run. Now we're just kind of digesting the gains here, up, down. We're dealing with all this new Fed, interest rates, economy, all this stuff. Okay, election, politics. But overall, we're just kind of resting and the next big move will be up. But we have to see it first. If we start pulling back more from here, not to go too deep into this one chart, it wouldn't tell me that, we're going to go down here or anything. It would just tell me that the overall consolidation that began in March is still ongoing, which I think it is at least right now for a lot of these stocks. Okay. Even if you look at, I'd add a couple more in here, but this is the IBD 85 index, which is stocks that have good relative strength and good earnings growth, which is like the pond that I sort of fish in. And again, it just looks like so many of the other charts I mentioned. Okay. So right now, neutral, intermediate term, longer term, still up, but just kind of waiting for the market, like I said, to show its hand. Maybe it doesn't. Maybe we keep chopping sideways. Maybe we have one big shakeout, then go. Maybe we'll just have to see how it plays out. To me, if you're in there every day right now, buying, selling, over, watching the 5-minute chart or whatever, chances are you're going to get, like I said, it's kind of a washing machine. You get tossed around in there. You're probably going to get tossed around pretty good. So try to get some positions and some fresh leaders. If you have some profit cushion, give them some rope. And then, I think holding a little cash makes some sense too, okay? The other thing, if you do want to be a little bit more negative or worried, we're just seeing more. This is Vertiv. I mentioned that some of these names that are, Vertiv really got going right out of the chute a year ago, more than a year ago, when the AI stuff first came on the scene last kind of April, May sort of thing. Obviously, it's had a gigantic run. It's certainly earned the right. Maybe I'm not saying it's top permanently or anything like that, but it's certainly earned the right to have a big correction and consolidation if it wants to. All I'm saying is that it's pretty much held the 50-day line here. This is the 10-week line on the weekly chart, but pretty much held that the whole time. And now this week we're seeing some real, pretty heavy volume through the 10-week line. It's 20% off its high. Is it the worst thing ever? Am I making some big prediction? No, but we're just seeing more of this type of action. This is, the utility. Some of these utilities have been super hot because we're going to need power for AI and all this stuff. So this is Constellation Energy, CEG. Not like Vertiv, but still, it's had a pretty good run here. Obviously, it's had a lot of, movement here the last few months. And now, again, it's just kind of getting sloppy. We're just seeing kind of a volume cluster on the downside here. Now it is holding the 50-day line, round number support near 200. We'll see what happens. But just seeing, every week there's another one or two, obviously software stocks last week, there's another one or two or three stocks that have been leaders that are acting either yellow flaggish or kind of red flaggish, obviously last week with some of those software names, okay? The other thing we saw this week was just commodities. And, commodities don't act like everything else. They can kind of come and go really quick and then come back again. So we'll see. This isn't the worst chart. This is Freeport-McMoRan. It's really not the worst chart overall. In fact, on the weekly chart, you can see this kind of nice breakout, and now it's fumbling a little bit here, but not imploding or anything. But we're just seeing more of these come off. Oil stocks like FTI, that was a pretty decisive breakdown here. So we're just seeing more stuff come out of commodities. Some of the gold stocks have been weak. What that means for the market, ideally, it kind of means that the inflation trade is fading, but that's just me hoping, and hope isn't a good strategy in the market. So that it is what it is with commodities. They've turned a little weak. I wouldn't say it's mayhem out there, but just something to be aware of, okay? Now, in terms of individual stocks, it just kind of remains a hodgepodge. There are some themes like, retail and stuff like that, but it just sort of depends on what you're looking at. This is Guidewire Software. It's not the most liquid name on the planet, GWRE. But, you can see it's been trending nicely higher here. And given the fact that software stocks got mauled last week and a lot of the leading names, Nutanix and Salesforce and stuff, were crushed and don't look good, it's just kind of interesting that this one did pull back, was looking worse for wear, but then boom, turned around on earnings. So pretty impressive move, and it's kind of held those gains so far. A lot of these things have had 2 or 3 good days, then they fade. So we'll see what happens, but certainly noteworthy here. This is just going to go through a variety. So this is GE Aerospace. Now I'm going to contradict myself because I said what's usually working right now is some of the things that are fresher that just broke out maybe in the last 3 months, or call it something like that. Well, here's GE Aerospace, which was GE, and then GE split into 3 things and all this. So it's had a big run. But I have to say, given the big run and given kind of, it's to the point now where I see so many of these other older sort of non-chip names, I guess I would say, that are starting to act funky. This one continues to act well. Now it's right here at the 50-day line. So, you know, later today, next week, maybe it just slices down here. But so far, it's a pretty tight consolidation. It's just a name I'd probably keep an eye on, given the fact that aerospace stocks in general look good. But just notice that it's kind of calmed down here. There's been no real selling in here. If anything, there's been a little bit of support. That was last Friday, the end of the month. But still, so we'll see what happens. So GE is the symbol, but it's GE Aerospace, okay? On to ONTO. This is innovation. This is your chip name. AI angle here. This is the one that really came, you know, broke out, one of the first names after the April correction, I guess. You can see it just right here. It has been a little, you can see, you know, kind of one of these pullbacks day after day after day after day, but hasn't done anything wrong. It's holding in there. 50-day lines approaching. So overall, looks like a decent setup. I mentioned Pinterest last week. You had a very nice tight, you had a big earnings move here, and just a very nice tight consolidation here. And this is overall within, you know, the breakout kind of came last year, but then it kind of had another consolidation here. So you can just see very nice tight action. And this week we're starting to see, you can see yesterday a little bit of, you know, follow-on buying here, and now, you know, testing new high ground. So the stock acts well anyway, Pinterest. Teradyne, I think I mentioned this last week. If I didn't, I meant to. One thing we're seeing, yes, there's NVIDIA and some of these AI names. Elsewhere in chips, there's some of these sort of standard, almost turnaround chips, which is like the cycle was down, now it's turning up. They do have some exposure to AI, but it's not like they're leading that parade. But Teradyne's one of them. I do like this chart a lot. Again, it's a turnaround, so earnings are going to be turning up a lot next year, I guess, is the estimates. But who knows? I mean, usually when these things turn, they turn in a big way. And just the power of this move, it's almost like a weekly volume cluster. It's a, you know, it's a $20 billion market cap. It's not like it's small. And so far, it hasn't given up, you know, any of its gains. Now, chip stocks have been resilient. But anyway, TER looks pretty good. Maybe you get it on dips. You know, it's up to you. In the chip space, too, we have, just want to point out, we have Broadcom, which I said right this time, not AVGO. Just nice straight sideways, kind of like what we're seeing with a lot of the market. But nice bounce back a couple days ago. They do have earnings next week on the 12th. So this would be kind of a, even if you don't want to own it, it's a higher price stock. It'd be something to keep your eye on in terms of the chip group and growth in general. Storage name, so this is Pure Storage. They wobbled. So this gapped up on earnings. It broke out back here, gapped up on earnings, reversed. Growth stocks got hit, came down. But again, it didn't really do anything wrong. It didn't even come down to the 25-day moving average. And now it's kind of, you know, pushing higher again. You know, my guess is, again, we're in this sort of environment. Things are kind of, you know, that sort of action. But so far, PSTG, excuse me, looks good. And this is NetApp, which is NTAP. Same group, a little bit more liquid. And you can see it's in a nice uptrend. They also reported earnings recently. So the group is acting well. Moving around here, so this is Royal Caribbean. This is not, you know, you're not in the first inning here. This was sort of the low, 2022. But I just have noticed that the stock got very tight in here. It was in top 10 a couple weeks ago, and it has been pushing above sort of round number resistance near 150. So RCL, obviously not pure growth or whatever, but the numbers are good. The stock continues to act well. A couple more names here. AppFolio, excuse me, APPF, I hope. Yeah, so this is, again, it's right about now I'm looking at, when I look at a software name, it's kind of like, okay, software is on the outs, growth software anyway. So is something holding up or looks okay, that sort of thing. I've been watching AppFolio really since this earnings move back here. And just, as you can see, it just hasn't been able to get going. So we've never owned it or anything. Well, it's been in top 10. I shouldn't say that. It's never been in growth investor. But it keeps kind of showing up on the watch list and not. You can see how choppy it is. So here's your pullback with the group here. This overall, it looks kind of sloppy, but this is just really 250 to, it's basically 10%, okay, is what the stock pulled back, which is very reasonable. So if the market can get going and if the stock can round out, you know, 250 seems like the obvious kind of round number resistance. It's just a name I'm keeping a distant eye on. Okay, next tracker, I've mentioned solar here. So that we had this rush higher, and now it's kind of been choppy on a day-to-day basis, but when you just step back, it's basically, again, kind of a cup with handle or whatever you want to say. But this one showed, it's definitely shown before that it wants to get going if solar can actually get going. But then eventually solar fades and the stock will fade. So you've kind of seen it, a couple different times here with here and then again here. Now it bounced back on some very, very good volume, a couple weeks here. And it's maybe setting up, okay? And last but not least, I'm just going to mention this because I do keep an eye on the IPO market, is Reddit. So, recent IPOs are crazy. Obviously now some of the meme stocks, that's going to make this stock even crazier. But it does have good sales and earnings growth, or at least sales growth here. Earnings are positive and growing, at least according to analysts, going forward. And just looking at the daily chart, again, it moves around a lot, so whatever. But it is liquid, and it has kind of formed this overall IPO base. I'm not going to tell you to buy it over a certain level or whatever, but RDDT, it is kind of a neat looking recent IPO that is liquid, that has some volume clues, that has earnings and so on and so forth. So again, something I'm keeping a distant eye on, okay? So going back, I'm actually going to use, let's look at the QQQE, boom, which is the unweighted equal weight NASDAQ 100. So, your NASDAQ 100, these are all just NASDAQ 100 stocks, but it's 1% each, okay? To me, this just, again, whether it's cup with handle or whatever, we'll see what happens. Mike, could this be a double top and interest rates spike and the market gets crushed? Yeah, of course. Anything is possible. I'm not stuck in the mud on anything in terms of my opinion. But I would just say, and I'll talk about this in my webinar, the odds continue to favor when you look at the evidence that the big picture is very likely very bullish. Nothing's set in stone, but, this to me at this point, especially if you kind of, step back a little bit, this thing went from 70 to 90, and now it's just kind of consolidating in here. And the longer it kind of holds up in here, the greater the chance that, the major uptrend is going to resume at some point. Right now, to me, it does remain choppy, just looking at these indexes and funds, but also just a lot of individual stocks, like I said, kind of getting tossed around. So I don't want to say less is more. There's opportunities out there, and I think this is a good opportunity time period to try to get, say you have a couple of bad things, clean that out, move into some stronger names, but also hold some cash and just wait. When the market gets going, as we saw in November, December, there's going to be the institutions piling in, and we can pile in too. So you don't have to get there ahead of time per se. So I think right now, a little nibbling here, being selective, finding the stocks that are really outperforming, but also being patient and holding some cash until the big institutions really click the buy button. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.